Hi, it's Kristen and Nasia from Les Maison Partners, and we are super excited because, well, we're always excited when we do these things because it's always usually somebody who we really want to talk to.
Right.
And so today we're talking to our good partner and friend, Charvi Kennedy. And Charvi, we're going to have you reintroduce yourself to the audience. You've been on before and provided an amazing amount of tips. And so we just want people to know a little bit more about their credit and what they can do about their credit actionable steps as well. And so I will ask you to kind of talk a little bit about your role.
First, thank you, ladies, again. It's the same for me. It's always a pleasure to speak on your platform because you ladies are so informative, so knowledgeable. So to be just associated with you all is such a blessing. And so I'm Charvi Kennedy, and I am the owner of Ascension Consultant Enterprise, and we are a inclusive financial industry type of company. And the reason why I say that because we have so many layers. It's more than just credit repair. It started off with me being a life health insurance agent about 6 years ago. And as we were becoming more successful, we were noticing those small details that was increasing our clients' policies with the pricing, and it was credit. So when we found that out, we were going, what does credit has to do with your lifestyle, with your life? We were thinking smoking, other habits that may cause your rate to increase. Well, they were saying a study was about the livelihood of a person's actions determines based off of their financial state. That was interesting. So 6 years later, here we are, and we've been working with people, not just with their credit, but working with them on financial literacy as a whole, because that's another pandemic. I know that we have this pandemic going on with health, but financial literacy is also a pandemic that has been a tale as old as time. So we manage in helping persons with debt management, meaning that whatever debt that you have, how we're able to help with formulas to pay that off in a healthy manner. We're also looking at savings and how a person can invest and with what they have. So we like and love working with clients on what they have, how we can get them to the next level, because credit used properly can assist you in getting some cash flow as well if we set up the foundation properly. So ultimately, with our different scales of assisting people, credit is the most popular because we're thinking it's other people's money. But if you manage it correctly, you could be able to form an income based off how you're using your credit. So we've been doing that specifically for 3 years, but we've been in the financial industry for 6 years, and we're growing and we're loving it. And it's all about giving information, some things that people may not be aware of, or we put it in a small package where it's a little bit different from going on Google to look it up. So we're a one-stop shop.
That's great.
Awesome.
So we really wanted to talk really about changes, and especially in the credit industry. And so, obviously, during the pandemic, a lot of people have changed the way that they are living, and they've changed their lifestyles, and they've had differences with job roles and income. So, I just wanted you to talk a little bit about how the pandemic has affected people's credit scores, and then we could probably talk about concrete ways that people can try to remedy some of that impact from the pandemic.
Yes, because once that shift hit, the date will be March 13th because that changed the stocks where all industries went down a number of percentages. So when you get that decrease in excess income, that grows a panic. So there's more use of cards, there's more use of other actions, there's a depletion of savings in order to accommodate for a loss of a job or for a loved one being sick because of an illness during this pandemic. So multiple factors have shown that with your credit being hit, we were using it properly, but we were also, I'm sorry, we were using it more, but we were also paying it more. So the change has shown in America that people are actually better with their credit. So what took place was there was an increase to credit from the national average being 698, it changed to 708. So that sounds great, right? But what's that going to do? It changed the bracket of the people who are on the lower tier. So we're talking about people who are 620 and under. It drastically changed, and it made it more challenging for them to get homes and get cars, because America's going, well, credit's getting better, so you should do better. But we know that's not true. We know some of these reports are a bit, the census and specifically, they can be a void of a certain amount of people. And these are minorities, these are women, these are persons who are not represented properly, but they have the largest problem with credit. So America says credit's great. It increased 8 points. This is the largest increase ever. But when you are in the field, such as us, and we are looking at these real people and we're looking at real problems, and unfortunately, whether they have no credit, the reason why it increased is because now they're not counting people who don't have consistency of credit. That's a huge void of a mass amount of people. And that's very dangerous because it's an unrealistic expectation. So now you have, instead of having a 580 or 620, you have to have a 640 credit score, or in order to just get a house and to get a better rate, you have to be 680 and 700. And it wasn't like that before. So what we're seeing now is an economic shift in how a person is using money that doesn't belong to them, which is a credit or a loan or any type of money that does not belong to them. We are seeing that those people are starting to become excluded. And with rates of rent getting higher, they said that's a 10% increase now from 1 year where a rental property, if you live there, it was $1,000. Now it's approximately $1,100 to $1,150 per month. We're seeing some drastic changes where there's some purposely pushing out of persons who their credit scores. If you're under a 620, there's definitely some care that would need to take place there.
So tell me, if I am under that 620 and I find that I'm trying to increase my credit score, I'm trying to rebound from something that happened during the pandemic, what are some of the steps that I can take to try to increase that credit score?
The first step is the hardest step, which is recognizing that my credit's not good. And that's very hard because it's a lot of blame on why our credit's not good. And we don't want to dwell on the past. We just want to know that it's there. And that's kind of hard because we still want to be stuck on, well, I was in college and they tricked me with credit cards, or I got into a circumstance where I was in a relationship and that person used my credit for negligence, all of those reasons. But it all sums up to, now that we know it's a problem, I have and I'm just throwing out a number, a 580 credit score. You know what? There are some decisions I didn't make properly. This is what I can do right now. I'm taking ownership of it and I'm going to commit myself. And I'm going to commit myself for a certain time frame, which I suggest my clients is for 2 years. I will have them for the first 6 months so we can get them kind of on that training wheel set. And by the time they exit with me, they're off their credit training wheels. But it takes 2 years for your credit to come in a recuperation, because the formula for FICO, which is a artificial intelligent formula, and it's always evolving, but they predict that they can tell what your credit score is going to be in 2 years. So when we're looking at that 580, I take ownership of it. That's really it's 2021. That's a score that they predict is going to be for 2023. So there's a formula that is going to determine what you're going to do in 2 years. So you have to know this is a 2-year commitment to overcome a deficit, the economic deficit. Okay. So all of that is just mental before we physically do anything. Just know it's not going to turn around that quick because we're taking ownership of it. Look at your credit report. You have to look at what it says. We have to know the evidence that's used against us to determine why we're limited in getting a home, why we're limited in getting a car. So there is a wonderful system now with the financial industry where you can get your credit report for free. You can do it one time a week on freeannualreport.com or annualcreditreport.com. My apologies if the site's not specific, but it's a industry regulated site that they give you your credit profile for free one time per week. So you have 52 chances this year and next year for 2022. They have extended it until December 2022. That's important because years ago, before 2020, you were only able to see it 2 times a year. So why is that important? Because when you know the evidence, you can work on what's happening to you. See if all of those amounts are correct. See if they're reporting properly. So you're basically knowing your financial DNA. It's kind of like learning your genetics on, you know who your parents are, or you know about your background. It's the same with your money. Your money is personal. Get to know that financial blueprint, and it starts with the credit report.
Okay. That's important, I think. And a lot of times we do find that people are hesitant to actually look at their credit report, and they may be fearful. And so it's good to know that there are people like you who are saying, first let's understand where you are. And I think that's the first step for almost everyone. And I can attest to that, and Kristen can talk about it as well. When we work with clients, that's really the first step, is to just know where you are and to kind of level set. And so that is really helpful. I mean, for those folks who have been underemployed or unemployed, can you kind of talk a little bit about, once you find more steady employment, or you get back to perhaps the salary that you were pre-pandemic, um, what should they be focusing on as far as debt for a lot of people? And I know this is very personal for each person, but as a whole, are you looking at credit cards are most important? Some people say, oh, I have to pay off a lot of my student loan. So if you could talk a little bit more about that, like kind of prioritizing people's debt.
The thing about money, which is currency in general, monies are tools. So each tool has its purpose. A credit card has its purpose, raw cash, your savings vehicle, your investment vehicle. So when we're learning about money, we just have to learn everything that we have first and learn that in the midst of it all, you need to still protect yourself first. It's kind of like when you leave a home and you put on an alarm to make sure your home's protected. Well, that's what a savings account is. So I know it's hard, and myself included in there, it's very hard, but it's a discipline structure. Money is a discipline. You have to run your money like an army. You are a general of your credit cards. You're a general of your money. So the first step, with whatever type of tiny income you have, let's say $1, because if you don't know how to deal with this $1, when you start obtaining money, you're not going to get into that habit. It's just not going to happen. We have to start with the basics. I say it like it's simple, but it's really hard. But once you get into that habit, it's as though it's water off your back like a duck. So you get that $1, give at least 20 cents to some type of savings for later on, because we never know if this is going to happen again, right? If you don't do it during the hard times, when a hard time comes and you haven't done it at all, we see ourselves in this situation again. So we have to think of the future. We have to think of ourselves later on. There's just no way around it. There's no way to get things back in order if you don't take care of yourself first. So your savings, if it's not 20%, I say at least 10%. So take 10 cents of that dollar and put it somewhere. I don't have to get into the savings account. You don't have to get into the investments. Just put it somewhere so it can be there for later. Every dollar, take that out. Communication is key with these companies, with these bill collectors, or more so with what's important in your home. So that's where we get into the budgeting. It doesn't sound fun, right? I tell people about budget and it's such a chore, but it's really you taking control of your money. You tell your money what to do. Money is not used to you have it come in and you spend it. Money doesn't like that when we're talking about raw cash. Even with your company, if you have a W-2 job and you get paid, that money is really yours the day they hit enter on payroll. It's really yours, but it takes them about 4 to 5 days to get its maximum use of that money before it hits you, because it also got to go to the taxes. It has to go probably if you have a 401k, which is another savings tool, but that money is being used properly for the benefit of that company before it even touches you. You could have had it on Monday, but they give it to you on Friday. And that's why these companies like Chime or those other companies, when they say we can get you your paycheck in 2 days, because they found that regulation that you can get your money earlier than what your company is going to give you for. So they just cut out all of those days that your company is sitting on that money to make more money. The point of money is to make more money. They like other monies, dimes like other dimes, dollars like other dollars. So if you come to a point where you have $50 and you owe the gas company $51, call them. We got to get over that communication to call them. Things can happen into place. And when you're budgeting, you may find that that $1 can be from going to the grocery store and you just see those Reese's Pieces. And now I'm talking to myself because I love some Reese's Pieces. So I will go, great, that impulse station, I'm going to get my Reese's Pieces. That dollar could have been used for something else. That's where your budgeting comes in. And you got to know where your money comes in. So a lot of what I'm talking about is time, really, that it takes to put into your account, that it takes to put into your habit. So habit is communication. So before we're even talking about giving it to, I'm not even talking about a bill collector. We're talking about regular bills now, because people are losing homes. Their water is cut off. They can't put gas in the car. So again, we got to go and be real. What do I have? And where can I do some cutbacks? And it's time for sacrifice. And we can't have it all, unfortunately. So once we get that in our head, which is a mental thing, we see things that can change the trajectory of how we're using our money. It's tried and true.
Love that. So basically, know where you are, make those hard choices, and just kind of start somewhere, even if it's starting small. So
Always small. We are not able to get to anything big if you don't have that layering set up. You can't set up a foundation, a house structure with having a sand as a foundation. You have to have concrete. It has to be laid out. And what we're learning with our clients is that, even when they have the hundreds of thousands of dollars, they are barely getting by because of money that's not properly spent. So the first thing we even go is, okay, show us your budget. They're going, like, like they're in trouble. You're not in trouble. I know you don't have a budget because I know how things are. Let's put it together, and you'll be amazed. It's like a epiphany. It's actually a liberating thing to see it on paper. It's exciting.
Can you tell us, since it's been a while since we've talked to you, can you tell us about any updates with credit? I remember the last time that we spoke a while back, you had said that they were one of the platforms that is typically used in the credit industry was going to be making some changes. So can you tell us a little bit more about that?
Absolutely. We in the credit industry, when people are doing credit repair, and there's just no end in sight, because people go, well, I've tried to have my credit repair for years and years and years. Well, there is a system in place, which is the Consumer Financial Protection Bureau, and it was put into place in 2011, spearheaded by Elizabeth Warren, and it's under the Frank Dodd Act, when you want to go into a little bit of that. And the importance of it is that it is holding these credit bureaus and collection agencies accountable for what is being reported. So because it's still new in an industry where credit was in the 50s, credit was discovered in the 50s, not discovered, the credit score was made by Fair and Isaac. So they have a 70-year history versus this CFPB that only has a 10-year history. Well, in the past year, there's been a change. I'm sorry, not even the past year. Time's going by so fast. In January of this year, of 2021, they have a new director, and he is in place because he used to be a worker under that industry. So it's just holding more accountabilities to these collection agencies, that when you're sending off your letter to say, hey, this is not right, this is not my name, I never had this card, or this wasn't my credit limit was higher, here's my proof. Where the companies used to give you the runaround, like, who cares, whatever. But this company is holding them accountable, and they can get fined for not properly reporting. And that's how we're able to get some deletions just off of the non-compliance of the credit bureaus and them not holding them accountable. So it goes like this. You have Equifax that you're looking at because you're looking at your annual credit report. And you notice on Equifax, they have something from Capital One that says your credit limit was 200, but it was 500. So you write a letter, you send it in. It used to be nothing really happened. They'll go, hey, Capital One, can you verify this? And Capital One goes, it's verified. Well, that's not good enough. So the Consumer Financial Protection Bureau has now got its girth and it's got its strength to say, no, Equifax and Capital One, if you don't get this fixed, it needs to be deleted, because that's in law right now. Mm-hmm. So that's a major change, that a person does not have to wait a whole year or two to get something fixed on their account. And I can attest to that. It should really take about 6 months. The CFPB, they just have to see that you have been trying to get in contact with the credit bureau and the company. So once you get about 6 months, then you send correspondence to that entity, the CFPB, and they will be able to assist in a final decision. So that's very important in the credit industry right now. You can get a final decision in approximately 6 months versus a year, 2 years, and that can speed up, because there's really no speed up, but that can expedite the process if you're looking to improve your credit. And I also would like to share that because of what's happening with the pandemic and because of the CFPB getting stricter, you have companies out there that are the credit companies. And I don't know if you noticed this yet, but I've had a client who said, we were doing some reporting and some information came back to verify her debt, and they had a big old picture of her, and they had her driver's license, and they had a utility bill that had her address. What they had her do was take a selfie to say, yeah, this is you. You have to prove who you are now. So they're taking a picture of you, your driver's license, and then in another picture, a selfie of you and your utility bill that has your address on it. So when you're trying to dispute it, they're going to go, nope, that's you. So that's going to be a major change in the industry if more companies take hold of that. So then there won't be too much of these disputing factors. So we only have a couple of years before AI, artificial intelligence, catch up with us consumers, because they're getting hip to these letters and the writing and the disputing. That's going to go away with that. So that's why it's even more important to manage your money now, to where hopefully that's not even a concern of yours later on down the line when we're talking about improving your credit. We can do it on other aspects.
Yeah, definitely. And so we are clear, people do have the right to dispute things.
Yes. I am queen of disputes. Like, hey, you have to have everything perfect. That's all right.
Right.
The right is that on paper, it's supposed to be as accurate as possible. You have that right, whether it's your profile, whether it's, like I said, a credit limit, or if you've never had it before. There's so many different angles to fight for your right to look right on paper, because it's ultimately like slander on paper, even if they don't have the one thing corrected. Because if you don't have something correct, you won't be able to get a home, you won't be able to get a car, and that's discriminatory. And unfortunately, in certain areas of America, there's been so much discrimination and so much predatory lending and taking advantage of people just in desperate situations. So it needs to be a stop to that. It's an economic injustice, and that's what my company and I were also about, is to right the wrongs of this economic injustice circumstances.
Yeah, I think that all of this is so important for people to understand, and the first part about getting comfortable with what this credit is, and it does not define you. And so I think that's the one of the most important things that we can communicate to people. Credit doesn't define you. This is not who you are as a person. It's just one factor, but it is an important factor for people, excuse me, to understand, because it does impact so many aspects of your life. So I think that was really great that you told us about all of these different updates. And I don't know, Kristen, if you have any questions too.
I don't know.
Kristen knows everything about
I know
it.
she does. That's kind of hard.
Bored.
But thank you again for coming on and sharing information with us. If you can let people know how to contact you, and we'll get that information and put it in our oh, there you go. I didn't know she had wrote that down already.
You
So
are there. What is going on?
to reach out to Charvi to use her services or questions, please feel free to reach out to her via email or phone. Awesome.
And also, if I can, on a quick note, because I remember with also what's going on in the industry of businesses. So before we were really talking about private or personal funds when we're talking about credit. Now there's also the industry with the small businesses where they had the EIDL loans or the PPP loans, and the importance of having things in place before. So many people who did receive those fundings, many did have their ducks in order, but for the ones who didn't, and unfortunately used that as a quote unquote come up and said, oh no, it'll be free, they're not checking that. They actually are. I work in close proximity with a CPA who's, a shameless plug. She's my mother-in-law. Her name is Beverly Kennedy, and she's a CPA. And we see these things in accounting all the time, that when they're asking, great, you had your year and you've received this money, what have you done with it? And we see a lot of companies go, uh-oh. So again, we're talking about financial literacy on a personal basis. And if also you're a business owner, being held accountable for your credit in regards to your credit worthiness is very important. So when persons are getting loans like that, they are looking at your personal credit. So we also assist people with transitioning into business credit, because that's not putting so much weight on your personal credit, because your business has its own identity. It has its own business taxes. It has its own filing with your EIN. So that's another level of leveraging your currency, whether it's your credit, your raw cash, or anything that has to deal with some type of income coming in. So from a person standpoint, you have you. You are the money. You are the source. So when we start respecting ourselves a bit differently as individuals, your money will change after that. It's just, that's why the hardest part is not getting a person a credit card or changing a person's credit score from this score to that score. We spend a lot of time just in the beginning. That's why I'm a debt counselor, because money is a relationship. So we have to understand this relationship with money. Why are we so dependent on it? Where do we get our ideas from it? Are we defined by it? And Nasia, you just said it perfectly. That's why it's hard, because we're attaching who we are to a tangible, man-made source, which is a raw cash or a credit, when we don't even understand we are the currency, because we're the ones that's making that money move or making that currency move. So it's very important that we change the structure behind our finances. And that's why we love the financial industry, by not just the credit. We're talking about life insurance. We're talking about other entities, having a home to protect your family, to know the longevity of real estate. This all goes together. So for you ladies to have a platform like this and to help me help you all share it, is just showing we're doing whatever we can in this big sea of confusion and hurt and pain. And we're doing our little part to just put a hole, to put a plug in that, leaky hole that so much distress. So let's just help people get back on their feet. And I'm Charvi Kennedy with Decision Consultant Enterprise. And, it's no judgment here. We've all been there. I've been there. That's part of the reason why I've even started this, so this is a tale as old as time. So let's get ahead of the game and, don't get behind just off of hurt or pain. We can get past that. So allow us to help you. If any questions, to reach out to me with my information. It will be an honor to help you.
Thank you so much,
Thank
Charvi.
you so much.
Okay, we are going to sign off and make sure that you always subscribe to our channel so you get the latest updates and the latest videos.
Absolutely.
All right, take care.
Bye.